And that's where I eventually want to get you, is first of all using the volume profile to identify trade opportunities, how to plan for it, how to manage your plans intraday, and then using the print to effectively manage your risk and to your profit. However, if and when unfair price is broken, again, it may become an unfair low. That's the whole scenario where resistance is now support, support is now resistance. And again, once price comes through an unfair high or low, it's most likely to move towards the high volume area because what? That's fair price. So in the trend, each low volume area is considered to be an unfair high if price tests up next to it to the next day. So let's say this is our day. And the next day we're trying to create a plan, and let's say price closed down in this area. I can draw. Let's say price closed right down here. Right? There's settlement, there's a close. And the next day starts, and it starts back down in this range. Right? Starts in this range. First thing we're going to do is say, okay, at that level right there, we're going to look at the bid and the offer. We're going to see what happens. There's a short opportunity, and what we want to see is still an unfair high. If so, we may have room to the downside. Well, what if price opens up in this range between these two levels? Well, if we have a test lower, we have a potential long right here. Maybe as far down as here, but we have a potential long right here. We have a potential short here and here. If the print tells us this is a good short, right? The offer gets weak, bid gets strong, we can take a short and we know how to manage it. We'll look for our next level. We don't care if we get a tick or 2 ticks. I don't really care about that. I'd rather manage my trade, get a tick, 2 ticks, or break even, and get a better trade entry level lower, because now I got a larger range, because this is where, if this works, this is where price is likely to come to, as opposed to this. I'm going to make that back without any problem. So I don't care, right? And I'm not sitting down 150 or 200 bucks in the hole, knowing I got to make it up now in this trade. My psychology is intact. I can still manage objectively, and that's important. So if price opens up here, guess what? We've got trade opportunities here, here, and up into here. So we can start identifying in the next day, looking for price to do some balancing. We can start looking for these as trade opportunities. If, for example, price opens up and let's say it opens up here and we start getting movement to this upside, let's say it stops right there, right, and it moves down. What is this telling me? It's building out this volume right here. It's telling me in this market we're getting price acceptance today, right here, and that my next likely trade short is going to be up around this level here. And what I'm expecting to see after the day is either a price distribution that looks like this or one that looks like this, and this is going to start to become VPOC. And just simply because I understand that the volume profile, I'm going to show you an oil one, it works the same way in every single market. The elements are exactly the same in every market. Let's see. Would the low volume areas be considered areas of liquidity where traders want to move price to? The low volume areas would be where the market is likely going to move price away from. Because it's low volume, the market's job is to generate trade transaction, and where it's not doing a successful job of generating trade, it's going to move to a new area where it's generating trade, and that's the high volume areas. So the liquidity would come more in the high volume areas than in the low volume areas. But it's a great point, and I'm glad to see that you are identifying the concept of liquidity and where liquidity would come in relative to a high and low volume area. The only difference would be that it would be at a high volume area. Yep, you're welcome. And Michael, yes, high volume areas are magnets for price to go to. Yes, inside of value at VPOC, exactly right. Do I ever look for a certain number of high volume areas to form that might start to signal the trend is getting very late? Yes, I do. sort of similar to the fifth wave and Elliott wave. Not that I use it. Okay. I look for the positioning and activity of high volume areas. So for example, what I'm looking for is where's VPOC in the value area? Is it high? Is it low? That starts to tell me something about the overall market. So I'm not just looking at the high volume areas. I'm looking to see what is happening with price around those high volume areas and where value is relative to them. And I'll go through that as we kind of get into the next couple of days. So some other patterns of volume profile, a B pattern. A B pattern is you get a fast start and thin volume to the downside in the day, and then it's followed by two-sided trading and a bell-shaped curve for the remainder of the day. This structure is telling you that sellers had a lot of conviction at the beginning of the day, and through the end of the day, that buyers started holding, right? Buyers started two-way interaction. We got a balance, and knowing that the markets move from imbalance to balance, one of the things you just naturally start thinking about is if this is starting to become a balance area, and I can see it because there's a lot of activity and buyers are actively engaging sellers, then what is my trade plan? Well, my trade plan may be now that I'm looking for a long the next day here or here, and I would be looking for price to start rotating back up. And we got some weak structure in here, so back up possibly to that level, there would be a target. And if price gets through this level right here, this low volume area, I'm taking a long on a retest, and I'm taking at least to here. And what I really want to see is distribution to there and possibly higher. So this is where I'm going to scale. This is where I'm going to hold contracts to. If I start getting strength back down at the bid, price starts coming back down again, I'll get out of the trade, or I'll give it a little room to break even, et cetera, et cetera. And that's how we can use some of these patterns to generate potential, not even potential, but trade plans. And then we're looking for the day's activity, the day's profile to start confirming that, in fact, yeah, buyers were holding here. Right? We're looking at overnight activity. We're looking at the open. Buyers were holding here. Now that we've broken through this level, we're likely to start moving back up. And now I can look for longs and hold those long positions for higher potential. In the B pattern days, sellers have shown aggression and buyers have held and provided responsive buying from the bottom. Looking for a short at the upper, so in the day, let me just show you. In the day, after we start building out some volume here, VPOC drops, this is where we're starting looking for a short, right up in this area here. We're looking for a short there to move back down here, and then we want to see where does the day end. Does the day end down here? Does the day end around VPOC? Or does the day end up towards the top of this profile? And that also is provides some information about the conviction of buyers and sellers. And then the open the next day really helps us as well. The day will close typically inside of the lower rotation. And again, we're just looking to see, is it around VPOC? Is it higher, lower? What is that telling us, and how does that play into our trade plan for the next day? P pattern is just the opposite of the B pattern, and we get a very fast start and a thin volume to the upside. We get followed by two-sided trading and a bell-shaped curve for the remainder of the day. And what this is saying is buyers show aggression. Sellers never push back down into that thin area, but sellers have held in that area and provided responsive selling from the top of the day. And just like we were looking for a short, now we're looking for a long, around this area at the low volume area, looking for a long and for price to remain in that area. Then there are times when price will come through and it will take you out, it will test lower. Anything at any time can happen. But when you're watching the print and you're long and you see strength coming back into the bid, you instinctively and inherently know that your risk is higher. And then it's just a matter of you making a decision. And when you can make that decision, you know you're beginning to trade objectively. And once again, you're going to hear me say it 7 different times, 7 different ways. The only way to stay objective in the trade is using the print, the order flow, to manage that trade. Again, the day will close typically inside the upper rotation. Let's talk about poor structure, which I just showed you from yesterday. Poor structure is this area right here. It represents poor market structure, meaning there's really not a good bell-shaped curve here, right? We're always looking for the market to develop this bell-shaped curve in a profile at some level. And where it doesn't exist, we're looking for the market to come back, possibly the next day. Sometimes it may not be for a couple of days, but when the market comes back to this area, it is most likely to rebuild and build out the distribution. So at the time, it may be the next day, it may be 2 days, maybe a week later, but when price re-enters this structure, you are looking for, let's say you're short, price comes down here, you're short. I'm loving this drawing tool. So price comes through, you're looking to short right here. This is your target. Your expectation is that price will start to build out this structure and will come down there and possibly even down to there. And that's how you're determining your target. So you're looking for this to complete that bell-shaped curve. I'm just, you know, look, I get a lot of questions like, does it have to build a bell-shaped curve? No, the market doesn't have to. But as participants manage their inventories and they buy and they sell, the volume profile just always develops these bell-shaped curves. And when it doesn't, nothing is ever guaranteed in the market, but the probability is very high that it's going to come back and repair that structure, especially if it's in a market in a new area. So that activity, when it comes back down, is likely to complete that distribution zone with a higher area closer to center. So when we look at price and the ES over the last year and a half, and it's been going up and up and up, it will move up, create into new areas, create weak structure, come back, spend time building out that distribution zone. Once it builds out that distribution zone, boom, it's off to another level. It builds a ladder or a rung, kind of like on a trend day, just over a longer period of time. In fact, it's a good example. A trend day builds these distributions on the way up or the way down. Our trend has been for, I don't know how many years now, a lot of years now, to the upside. And if you look at a 7-year, a 5-year composite profile, and just look at the volume profile as price has been going up, all you're going to see is this amazing series of price distributions all connected together. You're going to see price moving up, balancing out, building the base, moving up, balancing out, moving up, and we've been on this trend for a long time. We're not getting off this trend until we get some responsive and sustained selling. Remember, price will continue to move in a specific direction until the other side steps in to shut that movement off. The other side stepping in to shut that movement off is represented 2 ways. Number 1 is responsive selling, meaning that selling occurs because of price, not because of news, but because of price. It is not arbitrary because somebody wants to sell, but it is outside of news. And it is typically a sharp move back the other direction and then sustained. So you're likely to see price rotate back up, but you're likely to see sellers begin to hold and then start taking it to the buyers. We haven't seen that in a long time on the ES. We've had pullbacks, but we've not had responsive selling that has been sustained. All right, let's look at normal. What we see in the normal distribution is VPOC typically is near center. We get a nice bell-shaped curve. Now in this specific profile, you'll see a volume distribution and a high volume area up at the top right here. What this is saying is this market is about to head lower. You got to finish to the upside. Price came up, and this massive volume up here was evidence that because price didn't go higher, this is evidence that sellers were absorbing everything that the buyers were handing them, and therefore the market is likely to move lower, down into these areas. I can take that information and I can start developing trade plans with that information. So the next day I'm looking for a short, not a bias, but I'm looking for a short. The market is saying we're interested in moving lower. You can see price starting to come down here. Interested in going lower. So what am I doing? I'm finding my low volume areas and I'm waiting for a test to those areas. I'm looking to the print to confirm that the buyers in fact are going away, sellers are stepping in, and that's where I'm taking my short. If they prove otherwise, that's okay. I can take a short small stop and wait for them to either confirm that they're going back higher, or this is a stop run and I can jump back in looking for a pretty good move. I'm not afraid of taking a stop, and because typically stops are going to provide my next opportunity. Whereas a lot of times people are they don't like taking stops. Nobody likes to lose money, but it's usually just providing you good information. We have a good finish to both sides of the auction, so this is a normal distribution. Again, VPOC is near the center. We get a good bell-shaped curve to the distribution. Price moves to and from high and low. Watch for signs that one side is holding more than the other. Like at the last one, price was holding at the top. You can see that from the volume profile. You can also likely see it in the print. When price fails to get through volume point of control, remember this, when price can't get through volume point of control, it moves off a low volume area back to point of control, and it can't get through it and starts heading towards an edge, that edge is at risk, right? Remember that? Let's see. Just want to make sure I understand. Volume profile is based on RTH. Volume profile is not based on RTH necessarily. I use a volume profile for the RTH session of the ES because the RTH session provides 80 to 85% of the overall volume. So I care about what those participants, see their high and low volume areas. How do you factor in the pre-market Euro session? We're going to go through that tomorrow and Thursday. So as an example, I will build a pre-market Globex volume profile, and then when the U.S. cash market RTH session starts, I will just simply start a new profile. Let's see. B profile, shorts only. Yeah, once in a B profile, the market is likely to close. Doesn't always have to, but it's likely to close inside of that B rotation. So you'd be looking for shorts at the top of that rotation, back down into value and to high volume and possibly to the low of the day at the highs. Yes, that's exactly right. Would B's and P patterns be considered a variation of an unfinished auction since you are looking for some kind of retest or continuation? When I talk about unfinished auctions, I'm talking about a specific time frame. So a B pattern or a P pattern would be considered a finished auction for that day. Be considered a finished auction for that day, and I would look for the next day's activity and the next day's auction to show me whether or not it is finishing or not. We're going to go through examples of finished and unfinished, and on Thursday and Friday when we actually get into the open and go into the live market, you're going to see what I mean when I talk about this auction's unfinished. It's not, the profile is showing it unfinished, the print is showing it unfinished, and it's likely to come back to that level. The one thing about an unfinished auction is what you can say about it, is the probability is high that price is going to come back and finish that auction. What you don't know is if it's going to be 1 tick or 2 tick or 3 ticks or 30 points. So you only know that in the print. Again, I can't stress this enough. Or you know this from using, a longer term volume profile to identify where a high volume area is where price is likely to go. But a unfinished auction is just a point in time. A developing volume profile is a point in time indication of the market. It's kind of like reading a book, right? You read chapter by chapter by chapter. You don't know what's going to happen in the whole book. You don't know what's going to happen in the whole chapter until you're done. It's the same thing with the volume profile. You don't know how that day is going to end until the day is done. But the developing volume profile is like reading a book chapter by chapter, and it tells you where things at any given point in time are through, are finished. And at any given time, that auction can reopen to that sign. Yeah, it's hard to write down everything. I think that, I don't know about the slides, but I know that the video will be made available. You don't count an overnight fill of the low volume area. What I'm looking for in an overnight low volume area is what does the pre-market and the RTH sessions do to that at that low volume area. So I'm looking for if the market retests an overnight low volume area that I have identified, and I had that this morning in the chart. If it reacts accordingly, then there may be some synergy between the overnight session and the RTH session, which would give me further confirmation of a trade. So I'm looking at an overnight low volume area, high volume area. All I'm doing with those levels is saying, is the RTH session the same, similar, or different than the Globex or overnight session? And if it's different, honestly, I just forget the overnight session. I don't use that data at all. And I focus on the previous day RTH session template and structure for my trading. Would you use Globex for euro and pound volume during the euro sessions? Yes. Yeah, absolutely. Or the you can set your own session for the the European session. You can create a session specifically for that. So for example, when I showed you that 1 minute chart, you can see at what would be my time here. Let me just find it. Again, this is just a flag. You can see when the European session opens, see all the volume, see the volume increasing. So you just start your profile at that session, at this session open. Last night's session filled yesterday's LVA almost perfectly. And that will happen often. And so we're going to use the previous night's session as a reference. So if there is an LVA from the previous night's session, let me go back and look. I want to make sure I answer the question, because some of you really are interested in trading at night, in the overnight. There was a low volume area this morning at 27.75 from the overnight Globex session. And price moved up through that area up to 30.50. A lot of responsive selling off of those upper levels, but as I look at this market, buyers certainly try to get price back up into that upper distribution today and have just failed. So this 22.75 level is going to be pretty critical for those of you who are still looking at the ES today. So yeah, I want to be really clear about this, is the overnight sessions, the volume profile is excellent for. I mean, excellent. In fact, I've given you a couple things. I've given you this first one, which is the closing swing high and low. I've showed you 2 days now. Here's the opening of the Globex session. Let me bring it over, because you can't see it when it's on a different screen. That I know for a fact.